Okay, so this is topic number 5, commercial banks, and then subtopics we have ordinary commercial bank and then the expanded with commercial banks. Okay, in the Philippine setting, the bank classifications are as commercial bank, and then we have the universal banks. The expanded commercial banks, this actually refers to universal banks. Okay, so in the discussion ahead, we will be having side by side or one after the other a discussion. So we have powers, and we'll have the commercial bank and then the universal bank. We have organization and capitalization for both commercial and universal banks. And then we have the operations. Basically, the operations is tied up with the powers or the authority on what they can offer as products and services. All right. And then in the latter part of the discussion, we'll have universal banks, the extra operations that they could provide, which the commercial banks, ordinary commercial banks, cannot offer to the public. So we have the equity investment, underwriting, and then dealership and securities, and then as financial intermediaries, in a way by definition later. Alright, so before we start with the discussion of commercial banks, I have here. So I forgot to make a point in the previous video on banking and financial institutions about government banking institutions. Okay, so what's the point? Conventional banks, the ones who are usually for profit, they would not usually target the farmers and fishermen as their clients. Even if they do, they would only allocate a small portion of their portfolio on it. Okay, so because it's expected to be a low earning project. So the government did well in ensuring the needs are addressed by LBP and DBP. And on the part of the Filipino Muslims, AMANA addressed their specific needs based on the teachings and principles of their religion. Okay, so let's digest things a bit. What's the other whole point of studying all of this? So to me, what I'm seeing is to banks and financial institutions whose bottom line is the profit, it's highly unlikely that they would customize a financial service to cater to certain sectors, including our farmers and fishermen and the smaller part of the population, the Filipino Muslims. So if it's about profit, it might not be feasible to target these groups of people, but the government does think about their welfare and their needs and is providing them with such services. Okay. Beyond this, we must ask though, are farmers and fishermen actually able to avail of these services? How many of them are, unaware that the assistance exists? How many of them haven't availed of it because of, lack of information? And then how about the MSMEs, the businesses targeted by LBP, the businesses who are operating on smaller scale? So information drives are necessary, information dissemination. You can say that the programs through LBP and DBP may be considered as community service or display of corporate social responsibility. So instead of thinking about the profit, they are focusing on improving the welfare of these groups. So it's a contribution to the community and to the economy as well. So I think we should still look into the requirements, the process, the effectivity, how it impacts and actually helps the lives of our farmers and fishermen. So maybe, this would be too detailed and would require more extensive research. So this is for further study. If we still have time later on, we'll do extra videos about it. And of course, we need, as I said, we need time to do the research. Okay, and then later on, in case that you get to work for these companies, you might want to be concerned about the actual process and how they're actually, conducting the services, ensuring that the beneficiaries are able to avail of these services. All right, so that's basically it. With that out of the way, let's continue with topic number 5, commercial banks. So commercial banks, I have here an article from Investopedia. So definition ng commercial bank. The term commercial bank refers to a financial institution that accepts deposits, offers checking account services, various loans, other basic financial products like certificates of deposits, savings accounts to individuals and small businesses. And then a commercial bank is where most people do their banking. Commercial banks make money by providing and earning interest from loans such as mortgages, auto loans, business loans, and personal loans. Customer deposits provide banks with the capital to make these loans, okay? So again, what do you call this? Yung basic setting natin for banks, so we have depositors. They could either put their money into the banks in the form of savings accounts or checking accounts. Checking accounts, normally if you have a large sum of money deposited in the bank and you are expected to disburse money to, pay some things. Mostly they're for business, individuals, entrepreneurs, small business owners. Okay, so for them to dispense or to pay off their suppliers, their creditors, or something else. Okay, so they do that via checking accounts. All right. And then these savings accounts and checking accounts, of course, they deposit their money into the bank and then they get a small percentage, all right? They earn a small percentage for putting their money into the bank. And then the banks, they offer loans and other services to those who need money, okay? Probably individuals or businesses as well, those who don't have the capital but they have ideas and existing businesses that they want to expand or they want to introduce new products or services, all right? That is where they get a large portion of their income, okay, by providing the loans, okay? On the part of the depositors, they earn less than 1%, okay? At most, it's 1% to 2%, okay, for the depositors with millions in their banks, okay? But for people who are saving only, let's say, less than 100,000 or that amount of money, the highest amount of interest they can earn is 1%. Okay, those lower than that, it's 0.25%. Okay, only a quarter of 1%. On the part of the borrowers, they are being charged like 12%, 10%, or 8% interest on the amount of money that they are borrowing from the banks. Okay. The borrowings, this can take the form of personal loans, salary loans, mostly for employees. And then for small businesses or MSMEs, micro, small and medium enterprises, we have business loans. Normally, the interest ranges from 8 to 12%. And then we have auto loans, either employees or businesses who'd like to acquire a vehicle for themselves and they have the ability to pay off. So there's also, they also charge interest there. And normally auto loans are like 5 years ang credit term. Alright, and then we have the mortgages if you'd like to, let's say, buy a home or would like to renovate your house, or you'd like to purchase a land with a house on it, okay, or a building. So you have your mortgages, loan mortgages, and again, interest rates on the higher end of the scale, 8 to 12%, okay? And then other services that they offer, they have certificates of deposits. Basically, if you would need this if you are an exporter or importer, and you have to present an evidence that you do have money in the bank which you will be using for the international trade. Or if you're going to travel to other countries, foreign countries, you also need to have the evidence that you have money to support your travel or whatever business that you have in other countries, or you have these certificates, okay? And of course, they have ATM services, charges, dormancy fees, going below the ADBs, but these are a small portion of their income only, okay? So basically, the loans would be the larger portion, the source of the income for these banks, okay, for commercial banks. All right. How commercial banks work? This is the next portion. Commercial banks provide basic banking services to the general public, to both individual consumers and small to mid-sized businesses. As mentioned above, these services include checking and savings account, loans, mortgages, basic investment services such as certificate of deposits. I think certificate of deposits also refer to treasury bills here in our country, as well as other services such as safe deposit access. We also have that here. Banks make money from service charges and fees, a very small portion. These fees are vary based on the products, ranging from account fees, monthly maintenance charges, minimum balance fees, overdraft fees, non-sufficient fund charges, safe deposit box fees, and late fees. Many loan products also contain fees in addition to interest charges. Basically, there's application fee, processing fee at the beginning, and then if you're late in paying your amortization, there's penalty or additional charges on top of the interest. Okay. Banks also earn money from interest they earn by lending out money to the other clients. The funds they lend comes from customer deposits. However, the interest rate they paid by the bank on the money they borrow from the depositors is less than the rate charged on the money they lend. Okay. On this side, you have depositors earning as much as 1% only, and then you have here on the side, the borrowers are being charged up to 12% of the amount they borrowed. Okay. Basically the charge to borrowers, it would depend as well on what the BSP is currently implementing, because the BSP also they have the power or authority to control the interest rates that are being charged by banks and financial institutions. So this would actually vary depending on the economic situation of the country. Alright. Commercial banks have traditionally been located in buildings where customers come to use teller window services and automated teller machines to do their routine banking. But with the rise of technology, most banks now allow their customers to do most of the same services online that they could do in person, including transfers, deposits, and bill payments. Nowadays, we also have cash deposit machines, so that if you're working and you're working the same banking hours, so you can still go to the cash deposit machine, put your money in it, although the bank is technically closed already. Alright. Many institutions are online-only banks. I'm not sure here in the country if we already have one, but there is one operating tied up with GCash, the CIMB bank, and they're online only. Alright, they don't have physical branches. Because these banks don't have any brick-and-mortar locations, they can offer a wider range of products and services at a lower cost or none at all to their customers. Okay, so aside from deposits, they're also offering loans just like other banks, right? The conventional banks. A growing number of commercial banks operate exclusively online, where all transactions with the commercial bank must be made electronically. Commercial banks are an important part of the economy. Not only do they provide consumers with an essential service, but they also help create capital and liquidity in the market. In a previous video, we've discussed the functions of banks. Okay, so this entails taking money that their customers deposit for their savings and lending it out to others. Commercial banks play a role in the creation of credit, provision of loans, which leads to an increase in production, employment, and consumer spending, thereby boosting the economy. Okay? The borrowers, they are being assessed if they have the capability, if their business ideas are feasible, and then if after the money is lent to them, so they would contribute to the economy by operating their businesses, hiring workers, paying taxes, engaging with suppliers and other creditors. So, the economy would grow, the GDP would grow. As such, commercial banks are heavily regulated by central banks. For instance, central banks impose reserve requirements, yes. And then this means banks are required to hold a certain percentage of their consumer deposits at the central bank as a cushion if there's a rush to withdraw funds by the general public. Normally, this only happens when there is a financial crisis that's about to happen. Key takeaways: commercial banks offer consumers and small to mid-sized businesses with basic banking services, including deposit accounts and loans. These banks make money from a variety of fees and by earning interest income from loans. Banks have traditionally been located in physical locations, but a growing number of them now operates exclusively online. Commercial banks are important to the economy because they create capital, credit, and liquidity in the market. Alright. Special considerations, this part here talks about the insurance. PDIC, we have up to 500,000 pesos, and then commercial banks, they're also allowed to offer T-bills, treasury bills, government bonds. Okay, Of course, since they are sure investments backed by the government, so the rates are comparatively lower than the usual risky investments, right? In some cases, commercial bank deposits, such as checking account deposits, pay no interest at all. But in the country, they have this ADB, average daily balance. If you breach a certain point, then your account would start earning money. But if you're below the ADB, then a certain ADB, then your account would not be earning any interest. Okay. Consumer lending makes up the bulk of North American bank lending, and of this, residential mortgages make up by far the largest share. This is in America, not sure about here in the Philippines, but basically they are regulating how much money could be put into real estate because we're trying to balance that out with the liquidity requirement. Okay. Again, the 2008 financial crisis, basically that's caused by the regulation, and one of it is the banks put their money into a lot of real estate investments, which made their money, their capital, not liquid enough. Okay. Automobile lending, when people or businesses would like to acquire cars, credit cards, another type of service that they provide. Visa and MasterCard. Basically, our banks here in the Philippines are affiliated with Visa and MasterCard. Alright, commercial banks versus investment banks, just a comparison. Again, in this video, we'll be discussing commercial banks and universal banks. Commercial banks, we've mentioned the services, products and services that they can provide earlier, but they are not allowed to act as investment banks. Okay, they are not allowed to do investment activities. But we have the expanded commercial banks. We call them universal banks here in the Philippines. The universal banks can act. Universal banks have all the powers, or they can offer the same services being provided by commercial banks, and on top of that, they are also allowed to provide services akin to investment banks, which is investing. Alright, investing activities. So just a comparison, both commercial and investment banks provide important services and play key roles in the economy. These two branches of the banking industry were generally kept separate from one another. Okay, there's this certain act from the this is in the US, okay, which was passed during the Great Depression, but of course, basically this trickled down to all other countries. We also have a similar type of bill here in the country. Alright. Back then, right? Great Depression, this 1930s, 1940s. While commercial banks have traditionally provided services to individuals and businesses, investment banking offers banking services to large companies and institutional investors. They act as financial intermediaries, providing their clients with underwriting services, merger and acquisition strategies, corporate reorganization services, and other types of brokerage services for institutional and high net worth individuals. Okay? So before, since there's not yet a classification of expanded or universal banks, so commercial banks are also acting as financial intermediaries. We have the investing and underwriting, merger and acquisition. So they're providing that services as well. But in the current time, there's a distinction now between commercial banks and universal banks. Only the universal banks are allowed to do the investing and underwriting activities. Alright. Here we have another article, Doing Business in the Philippines.com. Basically just a list of the banks, alright, to give you an overview. So list of universal and commercial banks in the Philippines. There are currently 43 universal and commercial banks. Later on in the upcoming videos, we'll also be discussing thrift banks. So there are 57. Rural banks, there are 492. 40 credit unions, 6,267 non-banks with quasi-banking functions in the Philippines. Universal banks actively operating in the Philippines and with the biggest financial assets have in-country headquarters in either Makati, Bonifacio Global City, BGC, Quezon City, or some other part of Metro Manila, Philippines. Okay, they have their headquarters or head office, normally in Manila. Provided under Section 4 of the Republic Act Number 8791, the General Banking Law GBL of 2000, the operations and activities of these banks are subject to the supervision of the BSP, Bangko Sentral ng Pilipinas. The complete list of universal and commercial banks provided below. Those with the biggest assets are also enumerated. We'll see them. Alright. Full list of thrift banks, rural banks, credit unions, and non-banks with quasi-banking functions can be accessed through the Directory of Banks and Non-Banks of the BSP. So if you want to check if you're dealing with a legit banks or non-bank financial institutions, you might want to check their name if they're in the directory by the BSP. Otherwise, you might be dealing with, illegal, unregistered businesses or financial institutions. All right. So we have universal banks. This is the expanded commercial bank. All right. In this video, we'll be discussing commercial and universal banks. Universal banks are financial service conglomerates that combine investment banking, commercial banking, development banking, and insurance to encompass a wider variety of services. Basically, universal bank is the highest form of bank because they can offer almost every financial service that you can think of. They combine banking, investment, development, commercial, insurance. All right, they can offer almost all of this. They're also authorized to engage in other functions such as merchant banking, mutual funds, factoring, housing finance, and practically all types of functions typical in the banking business. According to the BSP, there are 21 universal banks with active operations as of March 2018. So we have Land Bank, Australia and New Zealand Banking Group Limited. I'm not sure how to pronounce this. The Yosh Bank, ING Bank, Mitsuho Bank, Standard Chartered Bank, Hong Kong and Shanghai Banking Corporation as HSBC, Asia United Bank, Rizal Commercial Banking Corporation RCBC, Security Bank Corporation, Union Bank, Al Amana Islamic Investment Bank of the Philippines, Philippine Amana Bank used to be called that, Development Bank of the Philippines, Bank of the Philippine Islands, BDO Unibank Inc., UCPB, United Coconut Planters Bank, China Banking Corporation, East West Banking Corporation, Metropolitan Bank and Trust Company, MBTC, Philippine National Bank, PNB, Philippine Trust Company, PTC. Alright, so we have all these as recognized universal banks here in the Philippines. Alright, these are the most commonly known ones. And then we have commercial banks, privately owned institutions that accept deposits and lend money to projects to earn interest. They also offer personal, business, and mortgage loans, checking account services, basic financial products like savings and certificate of deposit to individuals and businesses. They are primarily owned by shareholders and are profit-based. All right. So we have 22 commercial banks as of March 2018. So we have Bank of Commerce, BDO Private Bank, Philippine Bank of Communications, Philippine Veterans Bank, Robinsons Bank as CTBC Bank, Maybank, Bangkok Bank, Bank of America, Bank of China, Citibank, JP Morgan Chase Bank, KEB, Hana Bank, Mega International Commercial Bank, Bank of Tokyo, First Commercial Bank, what's this? Cathay, United Bank, sorry, not good with pronunciation. Shinhan Banks, Sumitomo Mitsui Banking Corporation, Industrial Bank of Korea, United Overseas Bank, Guanan Commercial Bank. Alright, so we have 22 commercial banks. And then how many universal again? 21 universal banks. Alright, so here we have the list of banks in the Philippines with the biggest financial assets, top 10 commercial and universal banks. Banco de Oro, how much is this? Million, billion, trillion, 2.4 trillion. Metro Bank, 1.6 trillion. BPI, 1.5 trillion. Land Bank, 1.4 trillion. And then Security Bank, we have 796 billion. Philippine National Bank, 758 billion. China Bank, 607 billion. Development Bank, 557 billion. Union Bank, 488 billion. Resale Commercial Banking, 420 billion. There's a lot of money being put into these banks. These are assets, by the way. Assets in Philippine peso. Of course, this is not, what do you call this? Not in the form of money, essentially. Some of these have been invested into PPE already. Plant, property, and equipment. There are buildings, mostly. Different branches. They have a lot of branches, right? Especially, basically all of them. All of these banks have a lot of branches nationwide. Alright, so now we'll be having, after the definition and an overview of how many universal and commercial banks we have, and then the top 10, we're now going to discuss ordinary commercial bank and expanded commercial bank, also known as universal bank, their powers and operations. Alright, so I have here an article from lexology.com. So this is just an extract from the Banking Regulation Review, 11th edition. Introduction. Banks in the Philippines are classified into universal banks, commercial banks, thrift banks, rural banks, cooperative banks, Islamic banks, and government-owned banks, and other banks as may be classified by the Bangko Sentral. So this video is about universal banks and commercial banks. Later, we'll have thrift banks, rural banks, and then offshore banks. Previously, we've already discussed GOCC, government-owned banks, including the Islamic banks. And then cooperative banks, I think this would be later on. Credit cooperative banks, I think we've classified this under other financial institutions, right? So we'll be discussing that later on as well. So universal and commercial banks are the dominant groups, representing approximately 70% of the resources of the banking system. All right. Under the GBL, a universal bank is defined as a commercial bank with additional authority to exercise the powers of an investment house and invest in non-allied enterprises. An ordinary commercial bank does not have that authority. All right. So basically, yun yung kanilang distinction. There are branches, subsidiaries, and affiliates of foreign banks in the Philippines that are licensed either as universal or commercial banks. Earlier, when we read the names, you can see that some of them are foreign sounding. Right, so they affiliate foreign banks, okay, that acquired banking license here to operate here in the country. Others have offshore banking units with more limited functions. The BSP, which is the Philippine Central Bank, acting through its monetary board, is mandated by law to ensure that the control of the 60% of the resources or assets of the banking system is held by domestic banks that are at least majority owned by Philippine nationals. So I think this has something to do with sovereignty of the Philippines. Make sure that the banking system, 60% of the resources held by domestic banks, and then majority are owned by Philippine nationals, right? It's a restriction. I think every country has this restriction that foreigners can only invest at a certain point, and then ownership of assets as well. There are limits always. Otherwise, we could be overrun by foreign nationals again. Okay, so we have now the classifications, power, and scope of authorities of banks. I got this from the BSP website. The following are the classifications, power, and scope of authorities of banks, as well as the prerequisites for the grant of banking authorities. I think I only got the powers. Okay, I separated this into the different videos, okay, because in this video we're only going to discuss universal banks and commercial banks, right? But for the classification, you also have thrift banks, rural banks, cooperative, and Islamic banks. Powers and scope of authorities. All right, for universal banks, they shall have the authority to exercise, in addition to the powers and services authorized for a KB, commercial bank, as enumerated in Item B2, and those provided by other laws, the following. Powers of an investment house as provided under existing laws. Later on, we'll have a separate video about investment houses. We'll be discussing their product, service, and operations in that video. The power to invest in non-allied enterprises. The power to own up to 100% of the equity of a thrift bank. Okay, so basically, subsidiary. they can own thrift banks, an RB, rural banks, a financial allied enterprise, or a non-financial allied enterprise. Okay? If you remember, a money bank is a subsidiary of DBP. Alright? In case of publicly listed UBs, universal banks, the power to own up to 100% of the voting stock of only one other universal bank or KB, commercial bank. A universal bank may perform the functions of an investment house, either directly or indirectly through a subsidiary investment house. In either case, underwriting of equity, securities, and securities dealing shall be subject to pertinent laws and regulations of the SEC, provided that if the investment house functions are performed directly by the universal bank, such functions shall be undertaken by a separate and distinct department or other similar unit in the UB. Right? In a way, there's still a separation of the conduct of operations, okay? For them to have better monitoring of the different activities. So a UB, they could either have a subsidiary or a separate department within them that would solely be responsible for the activities related to investing. Alright? Provided further that a UB cannot perform such functions both directly and indirectly through a subsidiary. Okay? Cannot directly and indirectly. So it's either direct or indirect through a subsidiary. Right? Commercial banks, in addition to the general powers incident to corporations and those provided in other laws, a commercial bank shall have the authority to exercise all such powers as may be necessary to carry on the business of commercial banking, such as accepting drafts and issuing letters of credit, discounting and negotiating promissory notes, drafts, bills of exchange, and other evidences of debt, accepting or creating demand deposits, receiving other types of deposits and deposit substitutes, buying and selling foreign exchange and gold or silver bullion, acquiring marketable bonds and other debt securities, and extending credit subject to such rules as the Monetary Board may promulgate. So these rules may include the determination of bonds and other debt securities eligible for investment, the maturities, and aggregate amount of such investment. Reading too much. Alright, so basically this is the powers incident to operation of commercial banks. It may also exercise or perform any or all of the following. They could also invest in the equities of allied enterprises as provided in sections 31 and 32 of RA number 8791, the General Banking Law. Purchase, hold, and convey real estate as specified under sections 51 and 52 of the GBL. Later we'll have a separate video as well on the GBL. Okay, just an overview of the content. Receive and custody funds, documents, and valuable objects, safety deposit box. Act as a financial agent and buy and sell by order of and for the account of their customer, shares, evidences of indebtedness, and all types of securities. Make collections and payments for the account of others and perform such other services for their customers as are not incompatible with banking business. Upon prior approval of the Monetary Board, act as managing agent, advisor, consultant, or administrator of investment management, advisory, or consultancy accounts. Rent out safety deposit boxes and engage in quasi-banking functions. Alright? So those are the scope of their operations. Now we have the organization and capitalization. Again, this came from the BSP website. Basic guidelines in establishing domestic banks. So a new banking organization must have suitable, fit shareholders, adequate financial strength, a legal structure in line with its operational structure, a management with sufficient expertise and integrity to operate the bank in a sound and prudent manner. They're very strict with their requirements. In establishing a new banking organization, the documentary requirements to be submitted to the Banco Central are listed in Appendix 33. The revised rules and regulations governing the organization, membership, establishment, administration, activities, supervision, and regulation of cooperative banks are found in Appendix 34. Alright. When I went to their website, there's a lot of information there. It's going to be an information overload, but I just picked a few passages, a few sections that would be useful in our study. I did not get everything because everything is too much. Alright. Prerequisites for the grant of a universal banking authority, compliance with guidelines. A domestic bank seeking authority to operate as a universal bank shall submit an application to the appropriate supervising department of the BSP. The applicant shall comply with the guidelines for the issuance of a UB authority and shall submit all the documentary requirements enumerated in Appendix 1. Later on, we'll check out Appendix 1. Public offering of bank shares kapag sila ay publicly listed. A domestic bank applying for UB authority shall, as a condition to the approval of its application, make a public offering of at least 10% of the required minimum capital, and this condition must be complied with before it can be granted a license for authority to operate as a universal bank. So normally, before we get into the UB classification, they have been commercial banks prior, and then after publicly listing their capitalization, they could apply as universal banks. The term public offering shall mean the offer to sell equity shares to the public. Okay, kumbaga, their stocks are available for public trading through the PSE, Philippine Stock Exchange, right? Public shall refer to all prospective stockholders, excluding the bank's directors, shareholders owning 20% or more of the bank's subscribed capital stock, together with those of their relatives within the fourth degree of consanguinity or affinity, and corporations controlled by or affiliated with them. Alright. There's the requirement that at least 10% of their capital should be subscribed by or owned by the public. A bank whose shares of stock are already listed in the PSE at the time of filing its application for UB authority shall be deemed to have complied with the public offering requirement. Likewise, an applicant bank may opt to have its shares listed in the PSE directly instead of passing through the process of public offering. In either case, at least 10% of the applicant bank's capital stock should be held by public stockholders before it can be granted the license for authority to operate as a universal bank. Listing of bank shares in stock exchange. So domestic banks granted a universal bank license, existing or new, must list their shares in the PSE within 3 years, provided that in the case of new UBs, the 3-year period shall be reckoned from the date the license to operate as a UB was granted. In the case of existing UBs which have not listed their shares in the exchange, the 3-year period lapsed on December 27, 1998. Okay. The guidance on public offering and listing of bank shares are enumerated in Appendix 1. Separate. Alright. Or you can just check out that information through the link. You can go to the link. The copy of this script will be provided in the description. You can download this and read it on your own sweet time as well. Application and license fees for new domestic banks. So this is the amount that you have to pay in million pesos. Wow. Universal Bank application fee 500. This is in million pesos, so this is 500,000 pesos. License fee is 25 million. For a commercial bank, application fee is 400,000 pesos, and then license fee is 20 million pesos. Wow. All right. The application fee shall be non-refundable and shall be paid upon filing of the written application to establish a bank. So really, since you'll be dealing with money, I think they are trying to ensure that you have the ability to provide the money by yourself, the minimum capital requirement, and that you're not establishing a bank to get money from the public and run away with it later on. Okay, I think this is fair, the application fee and the license fee. Fair enough, okay? The license fee, which is the license fee? The license fee, net of the application fee, shall be paid after the Monetary Board has approved said application. The aforementioned fees shall also apply to existing domestic and foreign banks that are upgrading to the next higher bank category. Certificate of authority to register. SAC shall not register the articles of incorporation and bylaws of any bank or any amendment thereto unless accompanied by a certificate of authority issued by the BSP under its seal. The certificate shall not be issued unless the Monetary Board is satisfied from the evidence submitted that these are the requirements. All requirements of existing laws and regulations to engage in the business for which the applicant is proposed to be incorporated have been complied with. The public interest and economic conditions, both general and local, justify the authorization, and the amount of capital, financing, organization, direction, and administration, as well as the integrity and responsibility of the organizers and administrators reasonably assure the safety of deposits and the public interest. So in a way, I think, the presidents, the board of directors, the incorporators must be well-known individuals who have their reputation, who are known to have a background in finance maybe, or in banking industry. Okay. Anyway. Business name, UBs and KBs. Only a bank that is granted universal or commercial banking authority may represent itself to the public as such in connection with its business name. Minimum capitalization are as follows. This is actually a complete list, but I only took UBs and KBs. Okay, bank category, you have universal banks. If it's head office only, 3 billion required minimum capitalization. It could be higher, but the minimum is 3 billion. If it has up to 10 branches, 6 billion. If they have 11 to 100 branches, 15 billion. And then if they have more than 100 branches, 20 billion. Commercial banks, head office only, 2 billion. Up to 10 branches, 4 billion. 11 to 100 branches, 10 billion. And then if they have more than 100 branches, 15 billion. Okay. Guidelines on proposed investment from third-party investors, TPIs, for purposes of complying with the minimum capital requirements. So the BSP recognizes the indispensable role of banks in providing financial services to the public and their significant role in attaining sustainable economic development, because they really are contributing to that, while adhering to its mandate to safeguard and promote the stability of the financial system by ensuring that banks operate in a safe and sound manner. Hence, the Bangko Sentral sets forth the following guidelines on proposed investments from third-party investors for purposes of addressing the capital deficiency and restoring the viability of banks. A bank that has already entered into a final agreement with a TPI to invest in the bank, which amount of investment shall cover the full amount of the capital deficiency, shall immediately submit the subscription contract or written agreement with the TPI to the Bangko Sentral. It is understood that with the submission of such contract, the TPI has already agreed to infuse the needed funds to cover the capital deficiency. In case the transaction requires prior BSP approval under Section 122, transactions involving voting shares of stocks, Item B, the bank shall submit the following documentary requirements within 15 banking days from the submission of the aforementioned subscription contract, written agreement, or within the timeline prescribed by Section 122, transactions involving voting shares of stocks, Item B, whichever is earlier. Alright. So have your bank request signed by the President or officer in charge for BSP approval of subject transactions, accompanied by board resol of the TPI to that effect if the TPI is a corporation. Certified copies of documents showing that the amount of proposed investment of the TPI is deposited and placed in an independent bank, such as certificate of escrow deposit, certificate of deposits with holdout agreement showing the availability or holdout of funds for the said purpose, together with the corresponding waiver of secrecy of deposits or investments. Okay. So that's a lot of money. Okay, so basically what they're trying to say is that it should be documented. Those people who would subscribe to provide the minimum required capitalization should provide these evidences. Alright? You can read all this later on. Alright, and then we have extra topics for expanded commercial banks or universal banks. So they have their equity investment, underwriting, and dealership and securities. They can do this, in which case we should know how they're doing this. Alright, so summary of the underwriting process for us to have a clue what underwriting means. So there are three main stages in the underwriting or capital raising process: planning, assessing the timing and demand, and issue structure. The planning stage involves the identification of investor teams, understanding of investment rationale, and an estimate of expected investor demand or interest. In the timing and demand phase, the underwriter must evaluate the current market conditions, investor appetite, investor experience, precedents, and benchmark offerings, and current news flow to determine the best timing and demand of an offering. Finally, the underwriter must decide the issue structure based on the focus on either institutional or retail investors and the domestic versus an international issue. So basically, their clients here are corporations who are either issuing stocks or bonds, okay? When corporations issue stocks or bonds, sometimes they use financial intermediaries, universal banks, to do the process for them. Okay? The planning, the assessing, timing and demand, and the issue structure. Okay, as has been mentioned, so in the planning stage, they're trying to identify the investor teams. Should we target the conservative ones, moderate investors, or the aggressive investors? If the bank has, already existing list of clients, existing list of investors, can we offer the issue to them? Would they be willing to to invest in this new issue once by this specific corporation? All right. And then the timing and demand. So depending on the economic situation, sometimes there are periods wherein issuing new securities is a no-go. Okay, just like during the time of pandemics, of course, there are a lot of people who are suffering, businesses are suffering. So although there have been issues, but mostly in recent months, the issues are mostly by the government bonds. But still, I think we have enough rich and wealthy individuals in the Philippines who were able to invest in those securities. All right, and then we have issue structure based on the focus on either institutional. Does the corporation want to target institutional investors, or are they willing to also provide the securities to retail investors? All right, and then is it going to be a domestic or an international issue? Okay, so those are the structure at the structure stage. So there are three main types of commitment by the underwriter: firm commitment, best efforts, and all or none. In a firm commitment, the underwriter, the bank, universal bank, fully commits to the offering by buying the entire issue and taking financial responsibilities for any unsold shares. Okay, so basically, if they cannot issue it to other investors, they would hold the securities as if they're the investor. Okay. The most common form of commitment, best efforts or marketed deal, imposes no financial responsibility on the underwriter regardless of the performance of the deal. So dun sa best efforts naman, they did their best efforts to distribute the securities to the available investors. All right. If there is a portion that has not been issued to the investor, so the bank or the universal bank, the underwriter, is not in any way what they call this, required to hold on to it as their own investment. They can return it to the issuing corporation. All right. And then we have the last one. The underwriter is not. Finally, in an all or none commitment, the underwriter will not be compensated at all unless the entire issue is sold at offering price. This is a bit harsh, but I think it would depend as well on the corporation that you're trying to underwrite. If it's a very popular corporation issuing bonds or stocks, and there's really high probability that the securities will all be sold, that a large portion of the investors will be getting them, then you might go for this. All right, but if it's questionable, I'd rather not. Okay, or if you can also convert this to firm commitment. If they cannot sell the entire issue, then the bank would just buy the issue and hold them as if their own investment so that they could still get compensated. Right? So there's another video here. I will link this. You can find the link here on the document. Again, the document will be provided in the description, and then this video I will also link it down below. All right. And then we have underwriting. I think I have here the last two parts, difference between underwriter and dealer in stocks, right? So I have here an article from Investopedia again. Underwriter, any party that evaluates and assumes another party's risk for a fee. The fee paid to an underwriter often takes the form of a commission, premium, spread, or interest. Underwriters play a critical role in many industries in the financial world, including the mortgage industry, insurance, equity markets, and some common types of debt security trading. An individual in the position of a lead underwriter is sometimes called a book runner. Okay, basically you're selling the securities of a corporation. And understanding underwriters, the term underwriter is first emerged in the early days of marine insurance. Ship owners sought insurance for a ship and its cargo to protect themselves in the event that the ship and its contents are lost. Ship owners would prepare a document to describe their ship, its contents, crew, and destination. We started with marine insurance. Businessmen who wish to assume some of the obligation or risk would sign their name at the bottom and indicate how much exposure they were willing to assume. An agreed upon rate and terms were set out in the paper. These businessmen became known as underwriters, right? Basically, if nothing happens to the ship, then the fee would be an earning in full by the underwriter. Okay, where are we? Modern-day underwriters play a variety of roles depending on the industry they are working in. In general, underwriters are tasked with determining the level of the risk involved in a transaction or other kind of business decision. Risk is the likelihood that an outcome or investment's actual gains will differ from an expected outcome or return. So investors rely on underwriters because they determine if a business risk is worth taking. Underwriters also contribute to sales-type activities. For example, in the case of an initial public offering, the underwriter might purchase the entire IPO issue and sell it to investors. An IPO is the process whereby a company that was previously privately owned selling shares of a previously private company on a public stock exchange for the first time, right? We have types of underwriters. We have mortgage underwriters. Most common type, mortgage loans are approved based on a combination of the applicant's income, credit history, debt ratios, and overall savings. Mortgage loan underwriters ensure that a loan applicant meets all of these requirements, and they subsequently approve or deny a loan. Underwriters also review a property's appraisal to ensure that it is accurate and the home is worth the purchase price and loan amount. Mortgage loan have final approval. Underwriters have the final approval for all mortgage loans. Loans that are not approved can go through an appeal process, but the decision requires overwhelming evidence to be overturned. Okay, and then next we have insurance. When we say mortgage, normally it's a house. They are real estate type of mortgage. There's a collateral tied to the loan, especially when the amount being loaned is a significant amount. Okay. Insurance underwriters, much like mortgage underwriters, review applications for coverage and accept or reject an application based on risk analysis. Insurance brokers and other entities submit insurance applications on behalf of clients, and insurance underwriters review the application and decide whether or not to offer insurance coverage. Additionally, insurance underwriters advise on risk management issues, determine available coverage for specific individuals, and review existing clients for continued coverage analysis. Equity. So, stocks naman tayo. In equity markets, underwriters administer the public issuance and distribution of securities in the form of common or preferred stock from a corporation or other issuing body. Perhaps the most prominent role of an equity underwriter is in the IPO process, initial public offering. IPO underwriters are financial specialists who work closely with the issuing body to determine the initial offering price of the securities. But normally this is based on par or stated value, buy the securities from the issuer and sell the securities to investors via the underwriter's distribution network. IPO underwriters are typically investment banks that have IPO specialists on staff. These investment banks work with the company to ensure that all regulatory requirements are satisfied. Again, this can also be done by universal banks. The IPO specialists contact a large network of investment organizations such as mutual funds and insurance companies to gauge investment interest. The amount of interest received by these large institutional investors helps an underwriter set the IPO price of a company's stock. The underwriter also guarantees that a specific number of shares will be sold at that initial price and will purchase any surplus. Ooh, there's a guarantee. That's security underwriter, so normally bonds in the form of bonds. Underwriters purchase debt securities such as government bonds, corporate bonds, municipal bonds, or preferred stock from the issuing body, usually a company or government agency, to resell them for a profit. This profit is known as the underwriting spread. An underwriter may resell that securities either directly to the marketplace or to dealers, who will then sell them to the other buyers. When the issuance of a debt security requires more than one underwriter, the resulting group of underwriters is known as an underwriter syndicate. Alright? Okay, and then the last part from in this Investopedia still about dealer of securities. So dealers are people or firms who buy and sell securities for their own account, whether through a broker or otherwise. A dealer acts as a principal in trading for its own account, as opposed to a broker who acts as an agent who executes orders on behalf of its clients. So it's like a business, okay? But they're not like the individual retail investors. Dealers are doing this in bulk. They're buying a lot of securities for their own account. Dealers are important figures in the market. They make markets in securities, underwrite securities, and provide investment services to investors. That means dealers are the market makers who provide the bid and ask quotes you see when you look up the price of a security in the over-the-counter market. They also help create liquidity in the markets and boost long-term growth. Basically, they have the ability to negotiate the price, the bid and ask quotes. Under understanding dealers, a dealer in the security market is an individual or firm who stands ready and willing to buy a security for its own account at its bid price or sell them from its own account at its ask price. A dealer seeks to profit from the spread between the bid and ask prices while also adding liquidity to the market. Okay. Liquidity, basically, it means there's an available buyer or seller of a security. It neither does business on behalf of a client nor facilitates transactions between parties. They are doing it for itself. Alright. A dealer is different from a trader. While a dealer buys and sells securities as part of its own regular business, a trader buys and sells stocks for his or her own account, not on a business basis. Okay, so dealer is pretty much a larger scale than a trader. Okay, so I have here a link, something else to read if you have more time. And then we have financial intermediaries. So this is the last portion, sorry. Earlier we have the underwriting and dealership in securities, and then this is the last one, financial intermediaries. We have here an article from managementstudyguide.com. Okay, so we have the meaning, role, and importance. Introduction. Financial intermediary is a firm or an institution that acts as intermediary, between a provider of service and the consumer. It is the institution or individual that is in between two or more parties in a financial context. In theoretical terms, a financial intermediary channels savings into investments. From the depositors, they are being lent out to business owners. Financial intermediaries exist for profit in the financial system, and sometimes there is a need to regulate activities of the same. All financial institutions are being regulated by the BSP. Also, recent trends suggest that financial intermediaries' role in savings and investment functions can be used for an efficient market system, or like the subprime crisis shows, they can be a cause for concern as well. That's why they need to be regulated. Financial intermediation works in the savings and investment cycle of an economy by serving as conduits to finance between the borrowers and the lenders. The lenders, you have the depositors, borrowers, the businesses that need the funding. In the financial system, intermediaries like banks and insurance companies have a huge role to play, given that it has been estimated that a major proportion of every dollar financed externally has been done by the banks. Financial intermediaries are an important source of external funding for corporations. Unlike the capital markets where investors contract directly with the corporates, creating marketable securities. Financial intermediaries borrow from lenders or consumers and lend to the companies that need investment. All right. And then we have their role. The reason for the all-pervasive nature of the financial intermediaries like banks and insurance companies lies in their uniqueness. As outlined above, banks often serve as the intermediaries between those who have the resources and those who want the resources. Financial intermediaries like banks are asset-based or fee-based on the kind of service they provide along with the nature of the clientele they handle. Asset-based financial intermediaries are institutions like banks and insurance companies, whereas fee-based financial intermediaries provide portfolio management and syndication services that can be provided as well by universal banks. Need for regulation. The very nature of the complex financial system that we have at this point in time makes the need for regulation that much more necessary and urgent. Alright? We cannot let them do what they want because in the short term, it might profit them, but in the long term, it may affect negatively the economy and the financial system as a whole on a national level, sometimes even on the international scale. As the subprime crisis has shown, this was in 2008, any financial institution cannot be made to hold the financial system hostage to its questionable business practices. Yes. As the manifestations of the crisis are being felt, and it is now apparent that the asset-backed derivatives and other exotic instruments are amounting to trillions, the role of the central bank or the monetary board, monetary authorities, in reining in the rogue financial institutions is necessary to prevent systemic collapse. All right. So basically what they're trying to say is if there's a financial institution, even just one that's tricking the general public, doing questionable practices, even though they have their own set of clients, depositors, those set of depositors, it's going to spread. The doubt in the financial institutions would spread to the general public, and then the general public might not want to put their money into these financial institutions, so there's going to be mass withdrawal of money, and that's going to cause a collapse in the financial system. So even just one, it cannot be allowed to happen, so they really need to be regulated. As capital becomes mobile and unfettered, it is the monetary authorities that have to step in and ensure that there are proper checks and balances in the system so as to prevent losses to investors and the economy in general. That's why they require reports for these banks to be submitted to the BSP. For universal and commercial banks, I think it's on a daily basis. Others, it's on a monthly or quarterly basis. Alright? Recent trends in the evolution of financial intermediaries, particularly in the developing world, have shown that these institutions have a pivotal role to play in the elimination of poverty and other debt reduction programs. Alright, so because we have small, medium enterprises, micro, small, and medium enterprises needing funding that would provide employment to more people. Okay, so that's helping the community, helping to alleviate poverty as well. Okay? Some of the initiatives like microcredit reaching out to the masses have increased the economic well-being of hitherto neglected sectors of the population. Further, the financial intermediaries like banks are now evolving into umbrella institutions that cater to the complete needs of investors and borrowers alike and are maturing into financial hypermarts. This only pertain to universal banks. Okay, all the other types of banks, they still have their limitations. There are certain financial services that they cannot offer to the public. Conclusion, as we have seen, financial intermediaries have a key role to play in the world economy today. They are the lubricants that keep the economy going. Due to the increased complexity of financial transactions, it becomes imperative for the financial intermediaries to keep reinventing themselves, innovation of new products, new services to offer, and cater to the diverse portfolios and needs of the investors. The financial intermediaries have a significant responsibility towards the borrowers as well as the lenders. The borrowers, they technically own the money, right? The very term intermediary would suggest that these institutions are pivotal to the working of the economy, and they, along with the monetary authorities, have to ensure that credit reaches to the needy without jeopardizing the interest of the investors. This is one of the main challenges before them. Financial intermediaries have a central role to play in the market economy, where efficient allocation of resources is the responsibility of the market mechanism. Basically, the intermediaries would be the ones assessing the risk, ensuring that the borrowers have the ability, that their business proposals are feasible, that they have a proven track record of making sure that the money would earn and would not be wasted in their projects. In these days of increased complexity of the financial system, banks and other financial intermediaries have to come up with new and innovative products and services to cater to the diverse needs of the borrowers and lenders. It is the right mix of financial products along with the need for reducing systemic risk that determines the efficacy of a financial intermediary. Okay? Reducing risk basically is the main point of having financial intermediaries do the analysis for their clients, okay, for the borrowers and lenders alike. Alright, so this is it for video number 5, commercial banks. Basically, we discussed commercial banks and universal banks and other stuff related to them, okay, including the underwriting and dealership of securities. Alright, so this is it for this video. Maybe I'll add some commentaries in the next video about this, okay, if I think of a few more. Alright, so that's it for this video. Thanks and bye.